For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockinyoursuccess.com/memberships.
Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware your risk in trading options is substantial. Please make sure you are aware of all your risks prior to placing any trades. Also note that in this presentation, we're showing hypothetical computer simulated trades and results. They're believed to be as accurately represented as possible. Keep in mind live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke from Lock in Your Success LLC. You can find us at lockinyoursuccess.com. That's LOCKE inyoursuccess.com. I'm a trading, performance, wealth, and success coach, and we specialize in helping traders become profitable in the markets. And today I'm going to take you into the realm of something we call high probability options trading. Now, high probability options trading can come in several forms. What we usually cover is strategies that utilize options to make money through the passage of time so that you can make money whether the market goes up, down, or sideways. This trade that we're going to show you today is something that we've shared with you before. That's a little bit different. This one does require maybe a little bit of price movement in your direction, but as you'll see, it's an extremely high probability strategy. And let's take a look at it, and we'll take a look at some of the metrics, and we'll show you how it works. So the trading strategy we're going to be covering today is called the Super Bowl. And you can do this on the SPX or the Russell. I would suggest the SPX, especially nowadays. The trade requires a minimum of $1,000 to $1,200 capital. We have a profit target on our strategy of up to 100% or approximately $1,000 if you do a one lot, which is the size we're going to show you today. And your exit loss trigger is also up to 100%. And the way things are setting up nowadays, a little bit more than 100%. You can say, well, how can you do more than 100%? We will show you as we move along. But this being the case, the fact that we're willing to take a total loss in the strategy, you need to make sure that your position size is appropriately structured for your trading account size. And we'll talk about that as we go along. So let me first start by sharing the trade guidelines summary. But before we do, a reminder to like and share our videos and also comment. Your feedback and your liking and your sharing helps us continue to bring this wonderful content to you. So, Super Bowl guidelines. Basically what we're going to do is when we are 65 days to expiration, we're going to enter a bullish call vertical spread in a manner where the total potential profit and loss are about equal. Now, there are some variations in the full guidelines for when this is having trouble occurring, as it is kind of now. But in general, that's what we're trying to do. And once we enter this position, we're essentially going to do nothing. So we're going to enter 65 days to expiration. We do nothing until the next cycle is 65 days to expiration, at which point we're going to enter trade 2. Right? So you may have two overlapping trades here. When we enter trade 2, we're also going to check on our original trade. We'll call trade 1. If trade 1 is up money, we're going to exit trade 1. If trade 1 is down money, we're going to monitor the trade once daily till near the end of the day. And we're going to exit on any day our trade becomes profitable on its checkpoint time. Otherwise, we're going to allow it to expire, sometimes at a total loss. So what you might be noticing is this strategy is extremely easy to manage. So I'd say higher than 85% of the time, you're going to enter this thing 65 days to expiration. You're going to check it when it's time to enter the next trade. You're going to exit at a profit. You're going to move on. Occasionally, we're going to do a day-to-day check. And again, that's under the situation where we're not up money when it's time to enter the next trade, in which case we're just going to exit when we become profitable. And then the next trade, we're going to do the same thing. So very, very hands-off and extremely, extremely easy to manage. And you might be saying, wow, I wonder how that performs. Well, let's take a look. So we've been trading the Super Bowl really since before 2011, but our analytical software only goes back to 2011. And with our analytical software, if we go from the trade expiration period of 1/2011 to the current trade, we've had 164 trades. During that time, we've had a total trade for trade return of 2,935.2%. Our win rate is 87%. Our maximum consecutive wins in a row is 31. Our maximum consecutive losses in a row is 3. Our average loss is 3 times our average gain. This is an important metric to consider. It means that, if you have 3 consecutive losses that are 3 times your average gain, you do have a bit of a drawdown. But, that's true with any trading strategy that you have. You're going to have your ups and your downs. And also a note here that your trading size should be small compared to account size, right? So I generally recommend around 1/10 of your account size. And we do this to maintain a reasonable risk management. If we lose a couple of trades right off, we want to make sure that we have the capital to continue trading. And here are the win and loss metrics from the analytical software. We have 164 trades, net profit of $29,350.50 with $1,000 planned capital per trade. We have a profit factor of 2.37, which is extremely good. We have a win-loss ratio of 7.5 to 1, and you can see the other metrics sitting in here. Okay, so let's take a look at the strategy. So this here is what the Super Bowl entry looks like. Now, if you go back to thewinningtrade.com, and you go back, we've done the Super Bowl several times over the last year. And each time we do the Super Bowl, we usually do 3 consecutive months. As of right now, the Super Bowl has won every trade this year. It's also won the majority of the trades last year. I believe we've had at least 14 to 16 trades in a row that have been profitable. Just for a little bit of background. Since we're doing 3 trades, I'm going to start back with the April expiration trade. We will do April, May, and June expiration of this year. So this is the setup here. We're going to come in and our asset price is going to be $49.90. We're going to do 1 vertical spread and we're going to do 20 points wide. If you want to do a smaller position size, you can do 10 points wide. That's perfectly fine. And that'll be a lower amount of capital. But for our trade, we've done it 20 points since the beginning, so we just continue to do it, 20 points. Basically, when I come in, we're going to try and get a 1-to-1 risk-reward ratio. Most of the time, historically, that's been possible. Since COVID, we haven't been getting that. We've been getting a little bit more in the trade than we would like and a little bit less profit potential. Regardless, it hasn't affected the outcomes of the strategy at all. So this is what the trade setup looks like. And the first thing you might say is, well, this isn't a high probability trade. The market has to go up in order for the strategy to make money. And I would tell you, yes, that's true, but it doesn't have to go up very much. And historically, the S&P 500 in any 65-day period is normally higher than it is on the day of entry. And if we look at our statistics, we see that this trade has a win rate of 87%. Even though statistically, some people will say that, hey, our short strike's at 51 delta, that means this has less than a 50-50 shot of making money. While that may be statistically true according to that theory, the reality is we don't care what's statistically true. What we care is what's actually true. And what's actually true is most of the time the S&P is higher. And like I said, that you can see that playing out in the trade results. And that's been true since 2011, since our analytical software has had reports. It's also been true since 2008 when I started trading a strategy. And it's also been true since 2002, which is the limit at which we back tested the strategy in the past. That being the case, we do classify this as an extremely high probability trade. In fact, according to actual results, it's also more high probability than most so-called high probability strategies you're going to see out there in the marketplace. So let's start here at our April expiration of 2024. It is now February 14th, 2024. Our monthly cycle, and yes, you can do this with weekly cycles. The concept is the same, but our monthly cycle is 65 days to expiration. So I'm going to come in here. I'm going to do my 20-point wing vertical. I don't want to get too far ahead of the market, so I will go maybe 20 points over the asset price, but no more than that with my long strike. and then I'm going to come in and put my short strike here. So from here, what we're going to do is nothing until our May expiration is 65 days to expiration. That's going to be approximately 30 days or so. And that being the case, I'm just going to jump ahead until for about approximately 1 month here. Let's go to March 13th. And as of March 13th, I just happened to hit 65 days exactly. So you can see right here, our May 17th, 2024 cycle is now 65 days to expiration. So basically during that whole time, I did absolutely nothing. All right, put the trade on. I did nothing. I didn't check it. I didn't do anything. I come in here and I realize that, hey, it's time to put on my May trade. What does my April trade look like? Well, my April trade looks like this. Sitting here, the market did go up in that time period. I'm currently up $523, so I'm profitable. So I close this trade and I take my $523 profit. And now it's time to open my next trade. So I come in here into my 65 day to expiration cycle, and I do the exact same thing. My asset price is approximately 562. I come in here, 10 to 20 points over. I'm trying to get that 1-to-1 risk reward ratio, which the SPX isn't giving me right now, but this is really the best I can do, so that's fine. I'm going to enter the trade, and from here, I have nothing to do until my June is 65 days to expiration. So I'm going to jump ahead about a month and we'll see how this goes. So we're going to go from March to, we'll call it April 17th. Let me ignore trades in case I hit the date right on again. So I've basically been sitting this for the whole time period, and oh my goodness, it's time to enter my next trade because my next trade is now 65 days to expiration in my June cycle. So I take a look at this and I say, oh no, I am down money. So that being the case, I'm going to stay in this trade. And I'm also going to enter the next trade because typically when this is the case, usually it's a pretty good entry for the next cycle. So I'm going to go ahead and enter my June cycle. And that's going to look like this here. Again, the same process. I'm going to be, asset price is at 50.28. I'm going, in this case, up to 20 points over the money. And I'm going to enter this. Again, my skew curve isn't great, so I'm not getting as much as I'd like to, but still, again, that doesn't really affect the strategy in general. So we're good to go. Now from here is the most active we get. I'm just going to check this if the market's up, right? So if the market happens to go up, then I'm going to check this and see if our May cycle becomes profitable. And I'm just going to check the charts for a moment, see if I can get an idea when that's going to happen. Not really. So let me just go ahead, say 5 days at a time, and we'll see if we're still in it. Right. So a week later, we haven't had any moves up to where we could pull the position off. Let's go one more week, and the market is still persisting down. We still have 16 days to expiration. Let's go one more week. Right. And realistically, I don't really need to even check this unless the asset price gets up over like 5,200 because we can see kind of what's going on here. But as of right now, we have 9 days to expiration. This is what our position looks like. So from here, we're just going to go day to day, and we're going to see when the position or if the position gets up money, and we're going to take that if at our checkpoint time, we are profitable. So when we go to the following day, what happens is we get this 23-point up move. We're now profitable by $133. We're going to call that a win. We're going to close this trade out, and that is the end of our position. Currently, our June position is up $478, but realistically, we're not ready to even worry about that yet because we're not going to worry about that until our July is 65 days to expiration, which doesn't happen till the following Wednesday. So if we just go to the following Wednesday, let me ignore trades here. Let me go to the following Wednesday. When I do that and I take a look at this, I come in and I say, it's 65 days to expiration for my July cycle. What does my June cycle look like? Oh, I'm up $688. It's time to exit the trade. I exit the trade and I'm out. And then I come in here and I enter my June cycle, which is going to be the exact same process. This time I only went 10 points over. It wasn't really worth it to go the 20. Because sometimes it really doesn't make a whole lot of difference here, and it didn't in this case. saying I enter this trade and I really don't check it until July is 65 days to expiration. And by the way, July was a winner also. If we take a look at our results for the year for the Super Bowl, it looks something like this. This is what we have. We've had wins on every cycle this year from 62%, to 66%, which is our June cycle, all the way down to our minor win here that we had in our May cycle. For the year total, we're up 327% of our planned capital. You probably want to make an account size correction for this because you're not trading it with a full account. You're trading it relatively small. If you said, I'm trading at 1/10 of my account size, you're looking at a 32% gain in the account. Also, we had a fantastic year last year in the Super Bowl. And over time, since 2002, our results have been absolutely spectacular in this strategy. So that is the Super Bowl, an extremely simple, very high probability options trade that we can do with small accounts and is very, very easy to manage and has an extremely good performance history. And that is why I love the Super Bowl, this episode's winning trade. If you like what you see, I encourage you to come on over to lockinyoursuccess.com. That's LOCKE inyoursuccess.com and discover how you can follow along with the Super Bowl and 11 other powerful income trading strategies as they unfold every week during our options trading for income webinars. Also, while you're there, check out thewinningtrade.com. That's thewinningtrade.com, where you can explore past winning trades, you can learn about upcoming winning trades, and you can receive access to free bonus material. And perhaps best of all, you can check out our free Trading Performance podcast, where you can learn to skyrocket your trading results regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see in the winning trade, please feel free to post them in the comments. I answer comments personally. Remember to like and share our videos. It really helps us continue to bring this wonderful content to you. Thank you for joining me, and I look forward to seeing you on the next winning trade.